Okay, so this is Tax Savings with Real Estate Ownership Explained, and I'm Jessica Chisholm. I'm a CPA at Huddleston Tax CPAs, and we're located just outside of Seattle, Washington. Before we get started with the presentation, I just want to show you a couple websites. First is smallbusinesswebcast.com. You guys may have all come to us today from smallbusinesswebcast.com, but if you came to us from another website, I want to make sure that you go ahead and make sure you're registered at smallbusinesswebcast.com. We made aware of future websites. I just want to let you know what some of those webcasts are. On July 27th, Lance Holbert will be doing tax update. He'll be explaining the new tax legislation. On August 3rd, John Huddleston will be doing LLCs and S-Corps Explained, using them to reduce taxes. That's about how to select the appropriate entity for your business. On August 11th, I do a QuickBooks overview, essentials every user should know. On August 23rd, I also do tax savings for construction, architecture, and engineering firms. And I also do a tax savings for medical professionals. Jennifer Zhao in our office also does tax savings for small businesses, just a general overview for all small businesses. But she won't be doing that again until sometime in September. I also want to show you our website, Huddleston Tax CPAs. We're available to help any of your accounting needs should you be looking for a new CPA. We do tax prep. We do tax prep and planning, coaching for small businesses, QuickBooks training, bookkeeping, payroll, pretty much any help your small business might need. Okay, so let's go ahead and get started with the presentation here. Again, if you have questions as we go along, feel free to type them in the chat. So the things I'm going to go over today are tax savings with personal residence, with owning your personal residence, tax savings with owning rental properties, what it means to be a real estate professional, and then I'll touch a little bit on house flipping and the tax impact of that. So when you own your own home, there are tax benefits if you have that. And some of the deductible items for owning your personal residence are deductible in the Schedule A of your personal Form 1040. And the things that are deductible are the mortgage interest that you pay on your home loan, points that you pay when you purchase or when you refinance, qualified mortgage insurance, and real estate taxes. So for the mortgage interest that you pay on the loan on your home, the interest is deductible on the first $1 million of home acquisition debt and the first $100,000 of home improvement debt. So if you take out a loan when you purchase your house for less than $1 million, then all of the mortgage interest you pay for the year is deductible on that loan. If you have a mortgage that you take out for greater than $1 million, then only you would take, say maybe you take out a loan for $1.5 million. So $1 million of that's 2/3 of your loan. 2/3 of your loan would be deductible. The interest would be deductible for the year. So it phases out after the $1 million. But you also can take out home improvement debt, maybe a second mortgage or line of credit, improve your home, and the interest is deductible in the first $100,000 of that. For the points, if you purchase your home, if you pay points when you purchase your home, then those points are deductible all in the year of the purchase of the home. If you pay points when you refinance your home, then those points would be amortized and deductible over the life of the loan. So if you refinance into a new 30-year loan and you pay points on that loan, then you would divide the points by the 30 years. And it would be deductible, a certain percentage would be deductible each year for the 30 years of the life of the loan. If you refinance or sell that house before you write off all those points, then the remaining points are completely written off in the year of the refinance or the sale of the house. For qualified mortgage insurance, if you pay qualified mortgage insurance on your loan, then it is deductible on Schedule A. If you started paying that mortgage insurance after, I believe, January 1st of 2007. Also, the real estate taxes that you pay on your home are deductible on the Schedule A as well.